Did you know that you can invest in real estate with your 401k? Hey guys, it's Brad from probatehouseguy.com. So I'm actually a real estate investor and I specialize directly in probate and inheritance properties. I decided to niche down into that space a number of years ago just to make life a little bit simpler. But today I want to talk about how you can use your 401k to invest in real estate. And I'm not talking about maybe one of the real estate funds or whatever that your particular 401k provider might offer as an investment option. What I'm talking about is actually using your tax deferred, or in some cases Roth retirement funds to actually directly or indirectly invest in real estate. Most people don't understand that you can do this. Now, if you have a 401k through your job, and normally it's serviced by one of the big companies like Fidelity or Charles Schwab, or like one of these bigger outfits that offer 401ks, usually you have very limited options as to what you can invest in. You get to pick your small cap, your mid cap, your large cap, index funds, blah, blah, blah. You get to pick all these things, right? And sometimes they have a real estate fund. I remember back in the day, I don't work in corporate anymore. I do real estate full time now. I've been doing that since I left my corporate job in 2018. After doing real estate sort of on the side for a number of years, decided to just go all in and do it full time. But I had, the option one time I remember of like choosing a real estate fund as one of my options. And really what that means is you're investing in what's called a REIT, or a real estate investment trust. And it's essentially like a big giant company that buys real estate and real estate related investments, but you don't really have a lot of say-so in that, right? You're just buying some little tiny piece of the pie. So let's talk today about how you can use your 401k to invest in real estate. Well, there's a few options. If you're still at your employer, what you would actually have to do is, whether this is your current 401k or you have an older 401k that maybe you had from a previous job and you never rolled it over, is you can actually do what's called a rollover. You can roll over both Roth, or you can roll over traditional tax-deferred IRA funds, and you can roll them over into what's called a self-directed IRA, or in some cases you can do a 401k. It's called a solo 401k. There's also SEP accounts, but traditionally most people roll it over into what's called a self-directed IRA. And what that means is essentially you have total control over your retirement money, where you want it to go. Now, I will say that there are some things that the IRS says that you cannot invest in. There's a very limited list of things that the IRS says you can invest in, but everything else is fair game. You will need to roll that money over to what's called a custodian. And a custodian is a company that typically is allowed to and follows the rules of the IRS, and they're approved as being allowed to manage IRA funds. But the difference between a self-directed IRA custodian and someone like your other 401k might have been through is that they're going to be a lot more hands-off with you. They're going to let you kind of do your thing. They have to make sure you've got some paperwork in order so that you are come tax time, you can file the certain filings, and they're making sure that you're not sort of breaking the rules, because if you do break the rules, you could potentially give up. You basically subject your entire 401k to becoming taxable, which you don't want to do. So you do need to roll to a custodian. I have a couple different custodians that I typically refer people to, that I work with, that I have experience with, that I've known for a number of years. So I'd be happy to give you a referral to one of those custodians. If you're interested in getting a referral to one of the custodians, just comment custodian down in the link below. I'd be happy to refer you to. I'll give you the information for both companies. I'm not, vouching for either company. Yes, if you do go to their website, I get a little bit of a sort of a little bit of a pay or commission. Let's call it very tiny amount on a referral commission, but be happy to refer you to one of these two custodians, and you can pick which one you want to go with. And they both are great, and they can help you sort of manage your IRA funds. So let's talk about the mechanics of this. What do you do, right? Okay, so you're going to take your 401k money, and you're going to do what's called a rollover request. So you're going to contact your current 401k provider and say, hey, I would like to do a rollover to this other company over here. And what they will actually do is they will send the money. Sometimes they'll send you a check made out to the new company. Now, there's certain requirements that and they're going to know what to do in this case. There's certain things that need to be on this check and certain information they're going to need. They're going to know what to do. They do rollovers all the time. In fact, when I was in corporate America, I would roll over my 401k from my last job to my new company and just keep rolling things over so that everything was all in one place. So what you're going to do is you're going to roll over those funds. So you're going to contact the company and you're going to say, hey, I'd like to do a rollover. And they're going to say, okay, great. Who are you rolling over to, or where are you rolling it over to? And you're going to need to give them the information. So I should probably back up a minute. You should go to the new custodian and get their rollover information, whatever information needs to be on the form. And then you're going to go to your current provider and say, hey, I want to roll over X amount of money, whatever that is, whether it's $10,000 or $100,000, your whole account, part of your account, whatever you want to do, you're going to take that money and you say, hey, I want to roll over X amount of money to this account over here. And they are either going to wire the money directly to the new provider, to the new custodian, or they're going to send you a check in the mail made out to this new provider. And you're just going to send that check to the new custodian, or they're going to mail a check directly to the new custodian. Those are kind of the three ways that they're going to do it. And essentially that money is going to go from this account to that account. And because it is a rollover, and if it's done within a certain amount of time, it is not a taxable event in the eyes of the IRS. Now, obviously, I should, caveat all of this and say you should consult your CPA before doing anything. I'm not a tax professional. I don't know your specific tax situation. You should consult your CPA before making any tax-related decisions. But what I can tell you is that if you're doing an IRA rollover, as long as it's done, and like I said, these companies know what to do. They know how to do it. It's not going to be a taxable event. So you can take this money and just move it over to this account over here. Once it's in this account over here, then you can basically do with it whatever you want, obviously within the rules of, tax-deferred retirement accounts. Like I mentioned, you can go to irs.gov. I'll put a link down in the description as to there's some prohibited items and prohibited parties in which you can invest your retirement funds. So be happy to put that in the comments or in the description below. So now that the money's over there, you're either going to roll it over into a traditional self-directed IRA, or you're going to roll it over into what's called a checkbook IRA. And there's pros and cons to each. So I'm going to talk about the pros and the cons, why you should do a traditional or why you should do a checkbook IRA. Okay, so let's talk about a traditional IRA or a traditional self-directed IRA. In a traditional self-directed IRA, you are going to have to go to the custodian every time you want to do a transaction. So anytime you want to send X amount of money to X place, you have to go to your custodian. Typically, they're going to have like a form that you fill out. That might be online. That might be a form, like a PDF document. You email that into them, or you fax that into them, or however they decide. Maybe they have a web form online. You're going to fill that out. Typically, they call that like to a direct to invest form. You're basically directing them to invest your money into whoever you say to send it to. So you're going to fill that out. Typically, it's going to be the amount. They might want some documentation back. For instance, and I'll get into this in another video, but if you are, let's say, loaning money on a transaction, they might want a copy of the security deed or the deed of trust or the mortgage deed or however your state recognizes that. And they might want a copy of the promissory note to keep in the file. They're not reviewing that information. It's up to you on how you want to invest your money. They just want to make sure that the paperwork is in the file for them, right? So in the event in the future, they have copies of that information to go reference if need be, right? So they're basically you're going to fill out the direct to invest form and basically say, hey, I want to send $50,000 to this transaction, this person, this business, whatever it may be, and they're going to take the paperwork and then basically process it, and they're just going to wire that money. Usually they're going to wire the money. They typically like to wire the money. They're going to wire the money to wherever you say to wire it to, whoever you say to wire it to. So also on that, it should be in the real estate business, there's a lot of wire fraud. So make sure that you are verifying the correct wiring instructions and not wiring your retirement money to the wrong place. So make sure that you are, before you wire that money or they wire the money, you are calling the title company or the closing attorney, whoever's closing, if this is a real estate transaction, and you are verifying over the phone with someone at the title company or the probate attorney's office, verifying that wire information, because sometimes bad people, bad actors will intercept emails or change emails, and they will change the wiring instructions, and inevitably you might end up wiring money to some bad guy in some other country and not even realize it because they made it seem like you were wiring it to the title company. Usually it's a last minute change of title or change of wiring instructions for the title company. If you get that, don't call and verify that. Do not send any money until you've verified that with them, and pick up the phone and call them. Don't call the phone number in the email you got. Call the phone number that you know is the legitimate phone number to that title agency, right? Let's talk about you wiring the money and then you're going to send it to the transaction. So that is a traditional IRA account. They're typically going to charge you a fee for each of those transactions. It's typically a small fee. And then there's typically like an annual servicing fee for the custodian. And then sometimes there's some other fees involved. They'll when you reach out to them and inquire about doing business with them, they'll give you sort of a list of all the fees that they might charge. Everyone charges fees. So if you're trying to get some free account, they don't exist. So little do you know that your 401k you probably already have with your employer, you're probably getting feed to death and you don't even realize it. No one actually pays attention to it. So pay attention to the fees. In these cases with these self-directed IRA custodians, they typically charge, that's how they make money, right? They charge a fee to service your transaction. Usually it's pretty nominal, maybe $50 a transaction, $100, $200 a transaction, something sort of a nominal fee each time you do a transaction. So if you are someone who you know is going to be doing a lot of transactions, it might be in your best interest to actually do the other option, which is a checkbook IRA, if you're going to be doing a lot of transactions. Because like I said, if you're doing a traditional account, they're going to charge you a fee for every transaction that you do. Now, if you're maybe only doing 1 or 2 transactions a year, maybe you're doing some longer term stuff, then it probably isn't in your best interest to do a checkbook IRA because you're not doing a ton of transactions. Doesn't make sense. There's a lot more upfront fees involved in setting a checkbook IRA up compared to a traditional self-directed IRA. So if you do a checkbook IRA, you're going to basically, the way a checkbook IRA works is essentially your IRA owns an LLC. So your IRA owns one asset, and that one asset your IRA owns is an LLC, and that LLC has a checking account associated with it. So basically, you're sending your money straight to this checking account of this LLC that your IRA owns. Now, there's a specific way you have to do this. There are specific types of bank accounts you need. There's a specific way to set up the LLC. Do not try to do this yourself. Listen to the custodian. The custodians can walk you through how to set up a checkbook IRA and all the steps you need to do in order to do it right. So don't try to do this on your own. Follow their direction. They know what they're talking about. Okay, so now that you have this checkbook IRA set up, you basically have checkbook control. So you can write checks or wire money or however, just like that. One of my investors or one of my private lenders that funds a lot of my transactions, they have a checkbook IRA. Actually, my dad has a checkbook IRA too. I didn't even think about that. I've got my dad set up on a checkbook IRA a number of years ago. And then one of my lenders that has a checkbook IRA, basically I can call that person and say, hey, I need $150,000 for X transaction. It's closing tomorrow. Will you do the deal? And they'll look at it and say, okay, yeah, that sounds good. Do I send the money to the normal title company we use? Yeah. And they can literally wire the money, pick up the phone and call their bank and wire the money within minutes of our conversation and have that money sent to the title company and fund that transaction just like that. Because they have checkbook control of their IRA and they can call in and do a wire transfer and send the money to the title company just like that. And I can send them the documents directly. We don't have to send them to the custodian. We just send them to them directly. Now, every year they have to file some tax forms and they have to file these inventories and blah, 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 blah. They're required to do these sort of things every year for the purposes of their IRA, but they have more control over the transaction. And what does that mean too? Well, they don't get charged a fee every time they do a transaction. Now they do have to pay a wire transfer fee each time they send a wire transfer out, but that's like $30, right? So the benefit of the checkbook IRA is that there's less transaction fees. So for someone who's going to be doing a lot of activity and maybe you want more control and you don't want to be at the mercy of calling the custodian and having to wait for the custodian. Typically, the ones I'm going to refer you, the custodians that I would refer you to, they're typically going to be able to turn around your transaction within, I would say, 24 to 48 hours. If it's a weekend, it might take till Monday. But they're typically going to be able to turn things around pretty quickly, in my experience, having worked with them. So those are your two options. You can move the money into these self-directed accounts, and then you can self-direct that money wherever you want it to go. So that's how you do it. That's how you invest your money, your 401k money, into real estate. So the next video I'm going to talk about is going to be what you can invest your money in real estate. So, all right, guys, this is Brad from probatehouseguy.com. I hope this has been helpful to you. If you're interested in working with me, I do specialize in probate and inheritance deals. Maybe if you're doing some probate and inheritance deals, you need some help with those deals. You have general real estate questions, whatever. I'd be happy to have a conversation with you. You can reach out to me at probatehouseguy.com. There's a web form there that you can fill out, or there's a phone number there on the website. You can call that phone number and you'll either get Missy that works for me, or you'll get me. The calls kind of route to either of us. So I'd be happy to chat with you, but I hope this helps you out. So thanks again for checking out this video. Again, I'm Brad at probatehouseguy.com. Have a nice day. Bye-bye.